We had a huge movement this week in the futures market, but what does that tell us about what is happening going forward with the S&P? And how do the futures markets give us a little bit of an insight into where the market may be going? All that today and more on the Market Brief. So an interesting week this week in the trade room. We had a live trade room on Sunday night, and we saw that the futures markets had gapped up significantly. There was a big gap, and a gap, for those of you that are unfamiliar, is the difference between the closing price one period and the opening price the next. It's like that magical movement that the markets do when the markets aren't open. Well, in the futures market, which is essentially a 24-hour market, it only happens really on the weekends, right? There's a few small intraday periods that it's closed, but for the most part, it happens from a Friday to a Sunday night. And so in our live trade room Sunday night, we saw that the futures market had gapped way up. And so we had to be able to speak to that and speak a little bit to what does that mean going forward. So let's go ahead and take a look so that you can see exactly what we're talking about. Let me move to the charts. So looking here at the ES, we can see that we had this big difference in price from here to here. Now that is what's known as a gap, right? And that is a gap where we went from 46.08 to about 46.60. So over 50 points, the market just went straight up, gapped up. And 50 points in the S&P is a significant number. That's a significantly large amount. And with a movement of that much distance, you would expect to see, a lot of news, a lot of things going on. I mean, that's a big move in the S&P. Something has to cause the S&P 500 to move 50 points. That's like the Dow Jones moving almost 500 points. I mean, it's a big movement. Well, let's talk about what we're looking at here, right? We're looking at a contract that is /ES, which is the S&P 500 index futures. And so when I go look at those futures at the cmegroup.com, that is the ES, right? Well, I'm going to go and take a look at something called the calendar here real quick and just show that when I look at the calendar, S&P 500 futures, I've got different product codes, right? The ESZ23, which is the contract month that expires in December of 2023. So essentially what that's saying is, where do we think that the S&P will be on December of 2023? The December 15th specifically. And then the very next one is ESH24, which is March. So the S&P has quarterly expirations. And those quarterly expirations mean that as we see time pass, the S&P is going to have slightly different prices for each one of those. So if I go to the current quotes tab, what you'll see is that the ESZ23 is trading at 46.27. Well, the ESH24 is trading at 46.80. A huge difference in price, and they're not normally that different. Now the June is 47.32 and the September is 47.77. So what does that tell us? Well, that tells me that over the course of the next few months, the market is pricing in an increase in price in the S&P. They're saying that we believe that the market will be trading higher at these given dates. Another example would be crude oil, right? Let's pull up crude oil, and I can see the same thing on crude oil. Here's the calendar for when crude oil has expirations. The January 2024 contract expires on December 19th, and then it's February, March, April, May, and each one has its own specific product code. When I go to the quotes, what we'll see is that in the crude oil futures, 71.21, 71.45, 71.67, 71.87, 72, 72.06, then it starts to go down a little bit, right, as we go on further in time. The point being is that they're a lot closer in price, right? They're much closer in price than the changes we see in the S&P. And it goes up for a period of time and then actually starts to go back down starting in September of next year. So this is a bit more normal on a futures contract. So when I go back to the charts, we were looking at the /ES, and this /ES contract that we see here, if I move this to the ES Z23, which is our December contract, you'll notice no gap. There was no change in price on Sunday evening. If I go to the ESH24, you'll notice no gap. There was no change in price. And so how do we trade when we have these big gaps like this and prices up here at 46.85? Well, I need to analyze from a price action perspective the actual contract that I'm trading in order to find areas of demand and supply. So if I'm trading this ESH24 and I'm looking for an area of demand, I'm probably going to look to this little wick over wick area right here as my next tradable demand area, with a breakout above the highs as my next tradable opportunity. Now, why does that matter? Well, if I go back and I look at this over the last 1 year, we're still not above the highest prices of this contract for the year. Conversely, the S&P, if I just go look at the actual index, the SPX, we are over the highest prices of the year, right? So what does that tell me? That tells me that the market's pricing in some bullish movement. It tells me that we're probably pricing in an interest rate decline to go along with that. And so I'm feeling like this is a mildly bullish sign for position traders and slightly longer term investors, and something to continue to look at as you go forward with your trades. But take a look at it for yourself. Tell me what you think. Shoot me an email, support@tradersarmy.com. Until next week, everybody, I'll talk to you soon. See ya.